4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. They're both free downloads. Let's get started. Hey traders, Stacey Burke from Stacey Burke Trading. Today we're going to be talking about simple, repeatable signal days. And one of my favorite signal days is, of course, the inside day. One of the reasons why it's one of my favorites is because it's simple, it's repeatable, and it's scalable. But most importantly, it's indiscriminate. It's non-subjective. Every trader has the same information available to him when a day closes inside of a previous day's high of day and low of day level. One of the most important aspects about the inside day is that it can represent a potential explosive either reversal or trend trade opportunity. Now, depending on where it presents, that signal day can alert us to an instrument and then whether or not it potentially sets up into our session. So obviously, traders may have an opportunity in Asia on a pair that may set up to move in Asia. They may have the opportunity in London. Or we can have a 3-session setup culminating in a New York session trade. Now, obviously, when markets are in breakout, we may have a market that pauses into consolidation for an explosive trend trade continuation. We looked at that on the metals a few weeks earlier. But what's simple is when you're trading currencies, these signals show up almost on a weekly basis, 1 or 2 times a week on different pairs, offering traders in different sessions opportunities for a range reversal from one side of the range to the other or a range expansion opportunity in a trending market. Now, just repeating page 69 in the playbook, an inside day is a 2-day price pattern that occurs when a second day has a range that is completely inside the first day's price range, inside of a previous day's high or low of day level. And in some cases, we can get the double inside day, which is rare. It does show up frequently, but it can be an indication of a potentially explosive move pending. Now, on page 73 in the playbook, we have an example of the Japanese yen and an inside day setup, which occurred over a Thursday, Friday, Monday. Now, Monday was an inside day on the Japanese yen, and that brings that instrument up on our watch list. As I've mentioned before, obviously, if you're trading Asia, you're going to be following the Japanese yen, ideally, maybe the Aussie New Zealand pairs or some of the Japanese yen cross pairs. Now, Friday closed in breakout, and we talk about Monday morning, new week, new timing cycle, that everything begins from Friday's closing price level. The market's closed in breakout. We've pulled back on Monday and traded back to the breakout of Thursday's high of day level, and traded slightly higher than the Asian session highs that were made prior to closing out the day as an inside day. Now, one of the things that we talk about is a Tuesday day 2 typically expands the range. We've said that the inside day is a signal day. We can get false break reversals or potentially trend trade opportunities. We have a high of week level that has closed in breakout, dumping down, making a pullback into the breakout level from Thursday's high of day before trading back higher into our US window and coiling sideways. Now, this is an inside day. Markets only do 3 things. They break out, they pull back, and they continue, which is a trend trade. They break out, they fail and reverse, offering potential reversal trades, or they stay range bound in a trading range. Now, we coil sideways into our Asia session window, going into consolidation, heading into our Asian session, and simple 15-minute chart. We're not looking to make things complicated. Remember, Tuesday day 2 typically expands the range. We have a signal day. We now have a market that's closed in breakout. The thesis may be that we are going to expand the range. Now we have a pin hammer, 9 p.m. New York time. Now here's the thing. Monday's a signal day. Now, if you're not hunting that signal, then this means nothing to you. But for traders who are hunting the inside days, they're looking for this opportunity. And just showing a narrowing of the consolidation, coiling sideways. Friday's day 1, Monday's day 2, and Tuesday is day 3 in a 3-day setup from either low of week to high of week or high of week to low of week opportunity with an inside day signal. The high of week is our day 1. Now, if we use our basic model for trade entry criteria, page 29 in the playbook, keeping things very simple, we have an entry, a stop loss, and we can use a high-low projection of our Asian range as a potential 200% expansion profit target. Once this market breaks through the high of week level, being prepared to either lock in the money once we start our new hour and a pin hammer extreme, clearing that level, or locking in the money as the market moves through. I preset my profit targets, and a 200% expansion of the range, which is outside of the previous weekly level, gives traders a very, very optimal risk-reward opportunity on a trade setup with an inside day signal day coming out of a 3-day setup. Asian session opportunity on the Japanese yen with an inside day trade signal. Now, another instrument that gave traders an inside day on Monday, signal day, was the Euro US dollar. Now, if we just back this up, we can see that Thursday formed the high of week level and that Friday closed in breakout. So we have a market that's closed in breakout. Thursday is our high of week level. How does price set up and behave into our timing window? Now, this pair actually gave traders in Asia a short selling opportunity coming off of our high of day in the Monday's opening range for a short setup into the Asian session. Once our Europe session opened, we've had a low-hanging fruit continuation that broke outside of our low of day level. Now, the Asian session, even if we again go back to our basic entry criteria, page 29 in the playbook, we have our Asia session short. Nothing complicated. We had an inside day signal. We had a market that broke down in Asia, coiled into our universal entry criteria for the parabolic blow off to the low of week level. But as we trade in Europe, and Europe continues to take out the low-hanging fruit set by the Asian session lows, we now have potentially an opportunity to re-enter this market for the thesis of the false break reversal. Now, keeping things simple, we have pin hammer, we have another pin hammer, and either one of these is an optimal entry, and we're heading into now at the bottom of the week, the London Open session. Simple rinse and repeat. Thesis is a false break reversal now, new week, new timing cycle, targeting back towards the high of week, high of day level made by Monday, day 1, the opening range in the new week. Simple, scalable, repeatable. Now, for traders who are waiting for the reversal to show up inside of our entry criteria, that's the same as the 10 a.m. club. It's a third hour entry opportunity in line with a market now that has broken out, pulled back. Now we have a false break reversal. So remember what I said about false break reversals. When they're going to be a false break reversal, they spend very little time outside of the range. And the purpose of that is they reverse quickly because they have traders caught down low on the low-hanging fruit, selling down low, shorting down low, but also traders who are in the money at the break on higher time frames. On the breakout of this level, breakout traders are now trapped. And the thesis is they are going back to the other side of the range to go after where higher time frame stops may be in the market or where the money is. And that's the example of the false break reversal. Now, another pair that gave us an inside day signal on Monday was the British pound. And we'll just put this trade into a higher time frame perspective. Now, again, let me repeat about what I love about inside days. It requires zero science, no furu gibberish. It's a simple opportunity when it presents. Now, sometimes we can see them on the backside of the week for reversal opportunities from expanding the range and then reversing back. Sometimes we'll see them on the front of the week, expanding the range, which can be part of a larger failed breakout or trend trade opportunity. So let me repeat, the smallest time frame that we're ever targeting is always going to be a daily range. That's the opportunity, targeting these day setups, day trading setups, where our smallest range is a daily level. And these levels, monthly, high of month, low of month, high of week, low of week, high of day, low of day, are where our signal and then the timing window and the setup should present. We're targeting a daily range. That's where we can minimize our risk and maximize our profit target range. So let's go back. We saw Monday, the previous week, broke out of Friday, the closing range, closing in breakout, pulling back, and continuing in breakouts. Remember what I just said, markets only do three things. It broke out again, and we had 3 days of breakout traders in the markets heading into Friday, which is also a signal. 3 days of longs, 3 days of shorts, page 51 in the playbook. We talk about some simple things, front side of a move and the back side of a move. Friday reversed that range and closed as a first red day. Remember, we had breakout traders in the markets on Monday, day one, the previous opening range. Monday was an inside day this week, and Friday was a first red day, a day that closes below the open. That's a signal day. Friday's the closing range of the week. Thursday's closing price was the highest closing price of the previous week. We had the inside day signal. That market opened on a small gap, pumped back up, and broke down in the Asian window. So I repeat, we had a first red day signal on Friday. Monday was an inside day. And as I've talked about, Friday's closing price is where everything starts from. Monday, day one, the auction process begins from Friday's closing price. That's the reference point. That's where the auction process starts from. We break down in Asia, we pump back up, and we have major red news at 2 a.m. Major red news at 2 a.m. The market breaks down to Friday's closing price before coiling into the half-hour point, and we put our basic model for trade entry criteria on there for an easy parabolic collapse back into breakout traders from the previous weekly Monday opening range breakout. This is called easy, stress-free, free cash. Day two typically expands the range. We had two signals, the first red day on Friday and the inside day on Monday. Now, traders from the masterclass will recognize that this is a dummy-proof trade setup. All time frames are driving the move. Now, this is also an example of when a market moves in either Asia or London that it MCB, it might come back, as opposed to an ACB setup, a 3-session setup into New York after a Wednesday CIB. Remember, we're targeting a range or range expansion opportunity for asymmetrical risk reward. Simple, repeatable, and scalable. No science project, no analysis paralysis. It's either set up into your session in your timing window, or there's no setup at all. Thesis is either going to be a failed breakout reversal or a trend trade range expansion opportunity. No gibberish, no analysis paralysis, simple, repeatable, and scalable. One of the most powerful signals on any instrument, and then whether or not it sets up into your session in the timing window. Keep it simple, traders. The inside day. Have a great day, and may the markets go with you.